Welcome to today's event, Intermarket Analysis, Charting Second Half Trend and Direction.
We believe that all of these climate issues continue to be one of the topic, and also how would all of that also affect other commodities, including critical minerals.
We see a sign of global investors losing faith in the US dollars. I think this last thing is the most important thing for us, especially in Indonesia.
So I can tell you that when gold start to move up, I have two portfolios. One for long-term investment, one for short-term trading into volatility.
Our profession can drive the transformation toward climate resilient organization. In fact, I think that is one of the most influential catalyst for the transformation is in fact in finance.
So by championing transparency, of course, again in emission targets and transition plans, finance professionals that is in the country today plays a critical role in reducing carbon footprints.
We will have a panel discussion. I would like to invite Ray Laksana, CFA, CEO of DBS Vickers Securitas, Tommy Zhu from Argo Dana Futures. We hope this discussion will provide valuable perspective and practical strategies for navigating the challenge and capturing the potential of Indonesian market. This panel will be moderated by Ms. Julia Simatupang, Country Manager and Chief Representative of ACCA Indonesia. Ms. Julia Simatupang is the Country Manager and Chief Representative for Indonesia at the Association of Chartered Certified Accountants, ACCA. She has been instrumental in driving the growth of the organization since December 2022, and she is developing impactful partnership and relationship with national bodies, regulators, university, and employer partners to further ACCA's strategic and growth ambition in Indonesia. Prior to joining ACCA, Julia was with the education industry for over 2 years, specializing in education advisory, consultancy, and sales. Her previous role includes stint with SP Jain School of Global. Please welcome Ms. Julia. The session is yours.
Ladies and gentlemen, welcome back. I hope you have refreshing intermissions. We now move into one of the most anticipated segment of today's conference, our panel discussions on Indonesia market perspective for the second half of 2025. Again, my name is Julia. I'm honored to moderate this session. And today, we bring together distinguished experts across market. They will share their insights across fixed income, equities, and commodities, and all through the lens of intermarket analysis. Without further ado, please join me in welcoming the first panelist. He has more than 90 years of experience in banking, corporate finance, and capital market in Indonesia and Singapore. He joined the DBS Vickers Securitas Indonesia as Business Director in 2021. He sits also in Indonesian Central Custody Committee. Ladies and gentlemen, let's give a grand welcome to Bapak Ray Laksana, CEO of DBS Vickers Securitas Indonesia. Pak Ray will provide an equity market perspective for our second half of 2025. The second panelist is a director of PT Agrodana Futures and holds the prestigious CFA, CFP, and also Certified Wealth Manager. He has experience in financial industry for almost 30 years with specialty in stock market, derivative market. He also actively contributes his expertise by giving lecture in prominent university in Indonesia and writing articles also for magazine. He has been appointed as board of jury for property and bank awards and Indonesia Capital Market Student Study for more than 10 years. Pak Tommy will discuss commodities prospect in the remaining of this year, especially with gold, who's been in the spotlight up until recently, particularly among retail investors. So thank you so much, Pak Ray and Pak Tommy. I think let's just begin with a broad questions. Yeah, the broad question that we have is: what are the key macroeconomic signals you're watching as we enter the second half of 2025, and how are they shaping your outlook? All right, so this is the first question to all speakers. How's your specific instrument react with recent uncertainties, like tariffs that put us into geo-economic fragmentation and our local domestic market. I think we now move to from the equity market, Pak Ray. What are your views on remaining Q3 and Q4 of 2025? How is the flow and what sectors in the Indonesian equity market are showing resilience or vulnerability as we move into Q3?
Thank you, Bu Julia. In general, in the earlier session, I think we mentioned a lot about the impact of Trump, and that's also still true for the Indonesian equity. So if we talk about the impact to Indonesian equity, I think first of all we also need to see what is the impact of Trump tariff policy to the overall Indonesia macroeconomic outlook, right? So it was mentioned that the DXY is weakened as investors sort of like they lose confidence in the US dollar, and China renminbi we think it will continue to weaken as part of the China strategy to maintain their exports to the rest of the world. Now, with that in the picture, we also see that rupiah still to be continue under pressure, despite the weakening of the dollar index. That's affected basically, which I will maybe discuss later on the Indonesia, our insight or domestic condition itself. Now, if we look, this is again, this is not investment advice. This is DBS view, right, on the macroeconomic and later on some of the Indonesian equity outlook. We forecast Indonesia GDP this year. If you look at the table at the top, is 5.1% GDP growth for this year, with a 2.2% inflation, and the fiscal balance is minus. Yeah, fiscal deficit 2.5%. Now, if we look at the tariff that US has mentioned to Indonesia, reciprocal rates of 32%, and we know that Indonesia export exposure to US is about 10% of our total export. Based on our economists, it translates into 50 to 60 basis point impact to our GDP. So if we are estimating 5.1 as our original case, the impact will become 4.5% to our GDP growth. Right. Well, if you look at the table at the bottom, 0.6%, relatively, I think, compared to some other country which has larger exposure to the export to the US, I think we are relatively in the middle range. Right. Now, if we look at the overall JCI, our equity index, in the past we see that foreign flow has been one of the key driver. In terms of the JCI index performance, we see during the COVID where the foreign start to inflow to Indonesia, and then it also drive the domestic market to also follow on, and that drive the recovery of our index. During the geopolitical tension, commodity was one of actually the counter-cyclical during that time, and we benefit from actually the heightened or increase in the commodity prices during that period. So what do we see now in 2025, right? We see now, in the past, the domestic story of the strong consumption in the domestic market as well as the commodity story has been one of the supporting point to our index performance. Now this year we see that has faced some challenges. I think if we see starting from this year, there's lots of news and also data that seems to show that there's some weakening in the consumer buying power in Indonesia. And the first quarter GDP was also about 4.8% below the typical 5% rate. So that story has started to sort of being challenged. And the second is a commodity boom. The recent commodity prices is slightly weakened, and therefore it also has not provided sort of some cushion for the JCI performance earlier this year. So what this translate, we think that 2025, second half 2025 will be more volatile compared to the previous years. Having said that, I think we will see some of a some catalysts that may help the JCI performance going forward. Right. Number one is in terms of valuation, JCI right now is about 1.5 to 2 times below the normal standard deviation. And as well as in terms of the dividend yield, is one of the highest at the moment, right? So we think that will attract investors to come in, and later on will basically help the index to recover. And in fact, we have seen quite a strong recovery since April until now. Yeah, and also we see government programs are still ongoing, and we hope that to be realized. For example, the trade negotiation with the U.S., and other projects, including the Makan Siang Bergizi, MBG, we know there's challenges in terms of the implementation, but if it can be executed well, it will be good for the overall Indonesia economy, as well as developing the human capital in the medium to long term. Yeah. Now, if we look at the chart on the JCI, the left-hand side, this is as of about mid-April. Our PE band is at -2 standard deviation, right? And in terms of the dividend yield, during that period also, JCI offers one of the highest dividend yield, at least in the past 10 to 15 years, right? And if we look at the right-hand side of the chart, we are comparing the earnings yield, that's earnings divided by the price of the equity, and we compare it to the 10 years bonds yield. Typically, actually the Indonesian 10-year bonds yield is above the earnings yield of the equity. But as of April, it's the vice versa, the other way around. So earnings or equity yield is higher than the bonds yield. So again, with these points, we think that it's quite attractive to enter into Indonesian equity market, given the valuation that is very attractive. Yeah. And for our view for the JCI this year, we think JCI may reach 7,350 based on 5% earnings growth, as well as 12 times forward PE ratio. Yeah, that is about 1 to 1.5 standard deviation below the JCI 5-year average PE multiple. Some sectors that we think quite interesting for the second half is that, for example, like the banks, because we think banks' valuation is attractive. The tariff impact may have been priced in, right? And so far we see that the credit growth and the credit quality is still acceptable. Number two is the consumer staples. The investment thesis here on the consumer staples is that we think the commodity prices, like the soft commodity and energy prices, will continue to be soft. So that means two things. One, the consumer has more disposable income; they can spend more. And second, the input prices for the manufacturers will also be lower, and therefore they may experience a margin extension. And the third will be the telco sector. This is two reasons. One is on the consolidation of the players, right? When there are three large players, remaining, typically those players will have a higher bargaining power. And second, also in terms of valuation, it's quite attractive if you can, depending on the share price, but it hits, some of the stock in the TMT sector actually provided about 7% dividend yield. Yeah. Sectors where we may be cautious for the second half is on the energy and the commodity. We think that with the potentially soft growth globally, then commodity prices will also remain soft for the second half. And also, our view is that given that the US may, due to a Trump policy, if the tariff is implemented, US may experience a higher inflation. And to counter that, we think that the US government may try to contain the energy prices, and therefore we think the oil and gas prices may continue or stay on the soft side for the second half of this year.
Thank you, Pare, for your second half forecast. I think with Trump's toning down on tariff and pandemic valuation of GCI in no pandemic setting whatsoever should lure investors into bargain hunting the GCI. Okay, so now let's move to commodities and US stock index. Pak Tommy, how these instruments can be a good hedging strategy with volatility in the market? What should investors be watching most closely? You may share your view, Pak Tommy.
Thank you, Bu Julia. Excuse me for please allow me to stand up. So I think it's become easier for me to explain. Okay, so since our topic today is about second half, so it's also important for us to review what happened since the beginning of the year. So actually, if we look at the big events in 2025, we know that, and I believe Pak Edwin, Mr. Wong also explained that since Trump's election as president, and he took office in January, then everything getting more and more chaotic. Yeah, and we see the peak was the Liberation Day. During the Liberation Day on the 2nd of April, the stock market collapsed. And what happened after that? During the 1 week after the Liberation Day, a lot of countries tried to negotiate, and finally, Trump mentioned, okay, we put on hold the Liberation Day tariff. Every country got the 10% except China. And what happened to China? China from 34% become 145%. So everything is become more chaotic. And we saw only by May, they have a truce. China and US make a truce, and everything now, until today, we are in the feel-good moment. So this is a big event that we review in January until today. So what happened? From the Liberation Day, S&P tank, Dow Jones tank, NASDAQ tank, even WTI is the West Texas Intermediate, that means the crude oil for the US production, also dropped because everybody become pessimistic about the productivity of this world. The economic will shrink, and so on and so on. Stock market drop, crude oil drop, and gold shoot up. It's like on the rocket going to the moon. This is what happened. And when you saw Mr. Wong's presentation, gold went up from 3,100 to 3,500. But because of the Liberation Day, the drawdown, that means the highest point, the latest high, to the lowest point, everything become bear market. We saw the news, S&P enters bear market, NASDAQ enters bear market, right? And total drop is more than 20%. But after the US and China truce, suddenly the headline twist. From the bear market, now we are entering bull market. Very interesting. Just in 1 month, April bear, May bull. So this is what happened to our global market. Yeah. While the gold, after 3,500, during the China and US make a truce, gold dropped. Mr. Wong mentioned as take a breather. The gold dropped to, right now is 3,200s. Yeah, so this is what happened for the last few months. And that means the volatility has increased. I never saw April bear market, May suddenly bull market. Normally bear market will last for few months, or bull market will last for few months or maybe years before it turns. But now in 1 month it happened. And also for the gold market, if you look at the gold price movement, average daily price movement since January 2024 until March 2025, the average is 1.35%. So one day, the high and low is only 1.35% of the price. But after the Liberation Day, now the average daily volatility double, 2.7%. So volatility has definitely increased, Bu Julia, because of all these things that happen. And so what can we expect for the second half, especially gold and US stocks? So let's discuss. Maybe this headline is not really in the news, yeah? But if you pay attention, especially for the US banks, starting July, they can count gold as 100% of the value. Why? Because gold now is a tier 1 asset according to the Basel III. So gold is now high quality liquid asset. Before July, it is only 50%. So I believe this will give incentive for banks in the US to have gold. Why? Because normally they only have the choice of US treasuries. But if you also pay attention to the presentation just now, the US treasury may go down. It could be in the downward pressure. So maybe the banks will try to think, okay, if I don't hold the US treasury, what products can I have? And now gold is considered 100% value. So this could be an incentive for the US banks. What else? This is very interesting, yeah? We know US is the country who has the most gold reserve. US holds 8,000 tons of gold. And then the second biggest, like Germany, and then France, Italy, and so on, including China, yeah? German, France, Italy, they hold 70% of the reserve in gold. Even Portugal is 84%, but Portugal is a small country, so the value is not significant. But if we look at Germany, France, and Italy, they hold more than 70% of their reserve in gold. While we look at the right side of the table, China, Japan, Singapore is only 5 to 6%. And if you look at the number of the total reserve they have, China is having trillions of dollars. And these trillions of dollars is only 6% in gold. If you pay attention, like Pak Edwin mentioned, BP Jamsostek wants to increase the stocks allocation from 10% to 20% in, let's say, 3 years' time. But Pak Edwin mentioned we would like to have it maybe in 1 or 2 years' time. So can you imagine if China and Japan increase their gold allocation from currently 6.5%, 6.6%, let's say to 10%. That means 3.5% of the total reserve. These two countries itself, the total reserve is almost 5 trillion. 5 trillion times 3%, then it's already hundreds of billions. So it could be a good demand for gold in the future. Yeah, Singapore 5%, India 13%. Just look at these 4 countries, we can imagine the demand for gold is very big. Okay? And if you look at the past performance, gold has performed steadily. For the past 20 years, the compounded annual growth rate, the CAGR, is around 9%. And surely beats the inflation rate. US inflation rate maybe average is around 2%. So with compounded annual growth rate of more than 9% for the past 20 years, it is a very good inflation hedge instrument. Okay? And what else can we expect? During the China and US made a truce, and then Scott Bessent, the US officer, mentioned it is implausible that the reciprocal tariff on China go below 10%. But the 34% could be the ceiling. It is very interesting. We are in the feel-good moment. From 145%, now become 30%, everybody feels relief, right? And if we look at this statement, that means the tariff will be there. It won't go below 10%. Maybe it will not go above 34%. But can we imagine if, let's say, we are a producer and suddenly our products are being taxed 30% or maybe 20%, will we make the same profit, expected profit, as if no additional tariff? I believe this one will be hard. The profit is not shown yet, it's not reflected. The effect of tariff on the profitability is not shown yet on the company's performance. But I think this one will have effect because tariff is still there, right? And so what happens if the tariff will be really implemented, maybe 20% to China or whatever percentage on every country? Definitely it will affect the global trade. The global trade will be impacted negatively. And what happened? Currently, the S&P 500, the PE ratio is at the 96th percentile. That means only 4% of the time, the PE ratio is higher. If 4% of the time is higher, that means we are already at a very high level. When the PE ratio is high, it might implicate our pricing, our current price is already high. Or if we want the PE ratio to go down, we can expect if the profit of the companies can really go up. If the price of the company is stable, but the profitability go up, then the PE ratio can go down without the market being collapsed. But if we look at the tariff, can we expect the profitability to go up? I don't think so. So this is very important that we are now at the 96th percentile. That means we have to be very careful. Any bad news can make the market crash. Bad news about inflation, bad news about profitability, bad news about the trade deal, we don't know. But we have to be very careful at this juncture of time, yeah? Okay, so expect volatility to be there. When volatility is there, how can we overcome this volatility? First, always have the long-term view. Because if we are in the woods, we cannot see. We only see the trees. We have to view from the top, long-term view. When we have long-term view, we are not afraid when we are in the midst of the chaotic market. Yeah? And then use dollar cost averaging. Dollar cost averaging means you put every same amount of money at the interval. So you are not worried about whether this is the high or this is the low. You just keep on investing at the same amount of money at the regular interval. So this is one of the ways to overcome volatility. And the third one, diversify. Don't put all your eggs in one basket. Diversify. And the last one is hedge the downside risk. Hedge the downside risk using some derivative instrument. Yeah. So when we have volatility ahead, don't forget these 4 tips so that you can navigate the market clearly. And like the long-term view, why it is important? Some research by the UBS, for the past 10 years, if the Nasdaq drop, let's say, if you look at the sixth bar, so if the Nasdaq drop more than 25%, the next 1 year, it can perform more than 25%. If you look at the third bar, if the Nasdaq drop 10 to 15%, then the next 1 year, it can go up more than 20%. And we know, because of the Liberation Day, everybody is saying bear market, that means the drop has been more than 20%. So if more than 20%, that means the fifth bar. So if the low is there, if the low is in, then we can expect the next 1 year, Nasdaq can go up by 25+%. So having long-term view is important, and the diversification, when we diversify, we try to have assets with low correlation. With low correlation, that means if this one go up, maybe the second asset is not going up that much, or maybe go down. That's diversification purpose, to spread the risk. So if we look at this table from Bloomberg, gold compared to US equity, the correlation is only 0.06. But if you see gold and international equity, the correlation is 0.72. That's why we always witness, last night the US stock market crashed. Then what happened to Indonesian stock market? Normally also minus, because the correlation is high. But with gold, US stock market crash, not necessarily the gold will crash, because the correlation is low. That's the point of diversification. Okay, that's all I have to share. Bu Julia.
Thank you so much, Pak Tommy, for an interesting view of gold and US stocks. I think, as the wise man says, Pak Tommy, every cloud has a silver lining, but bull will come after a bear in the US equity market. So I'm sure gold also provides a hedging opportunity with low correlation to other asset class. So very interesting sharing, Pak Tommy. So thank you all, gentlemen, for your outlook. It's very interesting with this dynamic that may build up trading opportunities in the market.
Okay, thank you, Bu Julia, Pak Ray, and Pak Tommy. My name is Budi from Sampurna University, Faculty of Business. So my question will be related to the education industry. So we have a lot of students that interested in the financial sector that maybe pursue careers in your company, such as Agrodana and DBS. So my question is that, what are the emerging trends or niche area within your respective company, or even the broader industry that offer the most significant growth opportunity for young talent? And if I may, my second question is that, with Indonesia focus on downstream processing and also ESG initiative, how do you foresee this trend will impact the career paths and job creation within the financial sector? Are there specific roles or expertise that will be high demand in the near futures? Thank you.
Thank you, Pak. You would like to answer first?
Okay, thank you, Pak Budi.
Pak Budi, yeah.
So we know that technology has helped a lot of traders. And even in my industry, like the derivative trading, technology also help traders to do the trade. So if students, especially the young ones, normally they are very aware of AI growth and then the automation. So I believe if they can master these tools, they can make their own trading system, they can offer these trading tools to other traders, and I think this one could be very beneficial for them. Like in my industry, the automated trading is like robotic. So everything is done the trading. You just put the algorithm so that they will execute your order exactly as when it happens. So I think this is important. And with AI, it is even more unimaginable because AI, they can try to create their own system and they can also execute. So I think these two skills, I think, is very good for the students to master. Thank you.
Yeah. So for the second question, Pak Ray would like to answer.
ESG, right? Yeah, I think on the ESG, I think it's becoming more and more important. For example, in our company, we have a special team. We call it the ESG desk, which a lot of the proposals, right, including in the banking side when we do the credit proposal, it has to go through the analysis by this ESG team. Basically, they will check and comment whether the company has followed the the ESG requirement based on our internal standards. So I think it will remains to stay, and in fact it will grow importance going forward. So I think having a skill set in ESG definitely will help. Maybe in the future, there may not be a sort of like a ESG team per se specifically, but it's going to be embedded in the culture and in the day-to-day, of everyone practices. So again, I think that skill set will become very important in the future. Yeah.
Thank you so much, Pak Ray.
What the impact of US and Saudi meeting in second half for the asset class, like equities and bonds?
Yeah, I think we don't know exactly what will be the impact to Asia at this moment, right? But I think I assume this is you're talking about the the agreement of the investment, right, from Saudi into US. I think potentially it will help to sort of boost the investment and the growth in the US. But how that will translate into Asia, it depends to actually many factors. For example, like will the tariff still continue for Asian countries, or will there be U.S. investment? Right, now U.S. having more funds available through the investment. Will that U.S. make the investment into Asia? So I think it's too early to say at this moment, but I think overall should be positive in terms of like if we take into account the global growth. I think that potentially should be positive.
Right. You also agree with that, Pak
Yeah,
Tommy?
if I may add, yes, US and Saudi deal, yeah, it should help a lot of US, yeah, definitely. If really they deploy the money and then really invest in US. But as Pak Ray mentioned, it's too early to say because we don't know and we haven't seen the realization of this investment project. Even though we heard that like NVIDIA, Jensen Huang mentioned in the White House that they are going to invest hundreds of billions. So all these are celebratory statements that we have not seen the realization. So we need to see whether they really deploy the money to invest and open maybe projects so that more recruitment, hiring happen. We don't know. We should wait for further clue. Thank you.
All right. Thank you so much, gentlemen.
Thank you. My name is Anthony Tris. I'm from BDO Valuation and Financial Advisory. I would like to ask Pak Ray, you mentioned that we have to be cautious on commodities. I think in Indonesian market, commodities maybe consist of three biggest subsector. One is energy, second is palm oil, and then the other is metal, gold, something like that. But from previous presentation, it seems gold is leading every metal, right? And it's already high. Even it's volatile, it's high compared to previous years. So I would like to ask you to elaborate more on the subsector of commodity. My second question is, Pak Tommy said that gold has low correlation with other asset. Yeah. Suppose I invest in metal like Antam or whatever companies metal commodities, is it good for diversification? Also considering your view on cautious for this kind of commodity equity. Okay, thank you.
I think to answer your questions on commodity, I think on the metals, I think gold is probably is slightly different from the other metals because gold has been used as a more on the safe haven, right? So in terms of in the time of volatility, people switch their investment into gold, and therefore we see that the gold prices has moved up, right? But the other metals are mostly used for industrial and manufacturer purposes. So at the times where volatility and there's a pressure towards growth, meaning the growth is expected to be softened, then the other metals will start to actually become softer as well. For example, like steel, nickel, right? And also we need to see the industry dynamic. For example, like nickel, are we seeing potentially oversupply in the market? Actually, that's one of the concern right now. That's why the nickel price sort of a bit weak in the past 1 week or 1 year, because lots of this facility are expected to go live into the market, and would then, after all this goes live, will there create a oversupply, right? So again, that's on the metal side. On the CPO, it's also again driven by the overall global and also domestic growth, and also CPO itself may be impacted directly by the Trump's tariff. So that's something that we need to watch out for. Yeah, otherwise I think the CPO prices would continue to be stable. Oil and gas also affected by the global growth, and as well as which I shared previously, that potentially the Trump government may continue to pressure the energy prices to contain inflation in the country.
The question is considering the low correlation between gold and other assets. Can we say invest in Antam company producing gold with other asset, and it works in Indonesia or not? I'm not sure about that.
Yeah, okay, thank you for the question, Pak. So we know that a lot of people think, let's say, okay, we believe gold is on the upward trend. So we want to invest in gold producing stocks, let's say. But we have to be very careful about this judgment, because gold producing companies, not necessarily they can manage their cost efficiently. So if the gold price go up, but their cost structure is not efficient, it doesn't mean higher gold price is higher profit for the company. So if we look at the gold, it's better to invest in the gold itself instead of finding gold companies. That's my opinion. Second, when we are investing in the gold producer companies, normally it is considered part of the whole market. When the market tank, normally maybe 90% of all the stocks also go down. So let's say we believe Antam, let's say, when the gold price go up, Antam should make higher profit, so the price should go up. But if the total sentiment of the market is negative, it could be very hard for Antam itself to go up against the market. So that's the thing that we have to be cautious about. And a lot of people in Indonesia especially, because they only know how to invest in gold is buying the gold bar. And if you look at the gold bar price, the difference between the buy and the sell, or we call it spread, is around 10%. That means if the gold price up by 10%, you are still break even. Right? So investing in gold, in the gold bar, bears the highest cost in my observation. So what can we do? Right now in Indonesia, they have digital gold, like what you may find in BSI, Pegadaian. They are offering digital gold. The spread is lower, it's around 3%. So definitely it is more efficient compared to investing in the gold bar. But if you want to find that the lowest spread is in derivative, so like what CME offers, like what Agrodana offers, the spread is very small. It is 0.0 something percent for the spread of the gold. So if we really want to have the intention of the investment is to have price appreciation, and we don't care about having the gold bar, touching the gold bar, then we don't need to invest in the gold bar itself. So first, answering back to your question, investing in gold or in the gold stock, gold producer companies, it's two different things. If you look at the gold price to go up, it's better to invest in the gold itself instead of the companies that produce gold. Second, when you look at the gold, so how you want to invest? There are three choices: investing in gold bar, but definitely the highest spread, invest in the gold digital gold, or invest in the gold derivative. And what is interesting about derivative gold, the underlying asset is gold, and the gold should be the highest quality, 999 purity. And it is registered in the exchange, so guaranteed by the clearinghouse, so it's all safe. And then, when we do the trading in derivative, all is using leverage. All derivative use leverage. So what is the benefit of using leverage? Imagine if we want to buy 100 ounce of gold. If we buy 100 ounce of gold, let's say the price is 3,200. That means we have to pay $320,000 to have 100 ounce of gold. But if we are using leverage, we don't need to pay 320,000. We just pay the minimum amount. So how much? Let's assume 20%. So we just put up 64,000. Put 64,000, you buy 100 ounce of gold. And when the price go up, let's say to 3,500, that means your profit is 300 per ounce times 100. That means your profit is 30,000. When your initial capital is only 64,000. Because we are using leverage. But maybe you will ask, what happens if the price go down? If the price go down, then our deposit or the collateral, 64,000, will be deducted by the clearinghouse according to how much you lose. If let's say the price from 3,200 drop to 3,100, so we lose $100 per ounce, times 100, so we lose 10,000. So our money from 64,000 is now left by 54,000. So what happens if the price keep going down? If the price keep going down, then your money will also go down. From 64,000, now become 54, 44, 34. And this leverage will require us to top up additional fund. Maybe if you are having margin trading in the stock market, we call it margin call. Now, when we have a margin call, that means we need to top up our account immediately. Because if we don't top up, then the market keep going down, then the clearinghouse will liquidate your position, or maybe we call it for sell. Maybe in the stock market, for selling. So we will have automatic liquidation if our fund is not enough to maintain our position because of the price keep going down. But can we imagine how much low can the gold go down? Now it's 3,200. Can it go back to 1,000? If we don't think it can go back to 1,000, that means we will never pay 320,000 like what we pay in the physical market. So I hope this helps in making decision when we want to invest in gold. Thank you.
Excellent, Pak Tommy. So let's give a big applause to Pak Tommy and Pak Ray for their insight now. I think that's the end of our sessions for today. So thank you to our panelists for their rich insights and to our audience for the thoughtful questions. This session has certainly deepened our understanding on Indonesia market outlook for the rest of 2025.